Hi, your mortgage guy, Freddy here. Join me as I share tips, tricks, and strategies in buying a home. Cheers. Just got a clear to close for a client that's buying a property in the Houston, Texas area. This particular gentleman is friends with one of my previous clients. They went to lunch. He was telling him how he was buying a home and it just didn't seem like he was getting a good loan. So my client said, well, listen, you should call my guy, Freddy. Just at least have him take a look at what you do. He's done wonders for me. I've done, I think, 5 loans for this particular Mr. Bradley, for this particular client. So he called me. His name is Billy. Billy called me, and I went over his current loan offering. Went over, his qualifications, what his goals are. Realized, the gentleman's a 780 credit score. He's putting 5% down. This other lender that the realtor was referring them to is suggested that they go FHA. So Billy has a 780 credit score. He's putting 5% down, has good savings, has a 401k. He just got divorced. So he's going through that, but not a big deal. Didn't affect his credit. They handled it properly. Excellent buyer. And, in my opinion, conventional is his better loan option. Now, my job is to present all options and let my clients make the best decision for themselves, right? Because they're the ones that are paying the mortgage. But this particular client was what we call steered. I don't know if the other lender was making more commission with an FHA loan. It can happen. In some mortgage companies, I'll say, won't name any, but where FHA may draw more revenue for the company, right? And in this case, that is the only thing that I'm led to believe, because my client was not even introduced to a conventional loan, and he just blindly trusted. But then when he saw the estimate, all the fees and some points that weren't necessary, especially with an FHA loan with the 780 credit score, and then he was curious as to why his loan amount was much higher than the amount after his down payment. Okay, so with an FHA loan, you pay what's called upfront mortgage insurance, which is a fee of 1.75% of the loan amount that you pay the government. Okay, so it can be a substantial fee that's added to your loan. You don't have to pay it out of pocket. You can, but 9.99% out of 10 people just finance it into the loan. So, in simple terms, if your sales price is $200,000, you're putting $5,000 down. Let's say your loan amount is $195,000. We take 1.75% of that $195,000, and that's added to the loan. Okay, so that would make the loan amount of like $198,000, right? $199,000. He wasn't explained that. He was just given the documents and said, "Here you go, sign here, and let's get moving." Well, you got to take the time. I went over conventional and FHA, compared side by side. First of all, if he was adamant about FHA, I'm never going to tell someone no. If that's what they want, then I'm going to let them make that decision. My job is to present the options, not tell them what to do, right? But he just wasn't explained. He wasn't informed. He wasn't told, hey, here's another option that might be a better fit, and here's why, which is what we did. So we moved over to a conventional loan, 5% down. Of course, this other lender was kicking and screaming, saying there's no way he can get approved with a conventional loan. There's no way that my mortgage insurance was as low as what I was quoting him, which I love that part. 2 weeks, less than 2 full weeks, I got a clear to close on a conventional loan. His mortgage insurance, because that other lender tried to say, okay, well, I can give you a conventional deal if that's what you want. His mortgage insurance was $138 a month, mine is $58 a month. It's a $295,000 home purchase in the Houston area. All right, and so I'm getting him a better interest rate, and even he did try to switch it to conventional and show him what he can do, but he wasn't close to my estimate from an interest rate standpoint, nor from a mortgage insurance standpoint. So my point in that is, make sure you're working with a true professional that can explain the benefits and the pitfalls of every loan type. again, my job is to not tell you what to do. My job is to tell you what options you have and inform you to where you can make the best decision. That's my approach. It's not everybody's, but make sure you're working with a professional. If you're confused in your loan process, you're not really sure of your options, you might not be working with the right lender. Do you need help financing your next dream home? Give me a call, 512-576-6115. Let's schedule a no cost, no obligation consultation to put together the perfect home buying strategy just for you. Cheers.